Hello, everybody. Welcome to my new weekly review. Today, I will start with the trade I took last week, GBPUSD, that is still running, the only trade I took that week. So, we will go first over that. So, we will start at the daily. What can we see at the daily? We are in an uptrend. We are at this first leg, second leg, third leg, fourth leg coming back. So, I will do it in yellow like this. So we have 1, 2, 3, 4. We have a bullish M. Within that, what we can also see is this shoulder one, this head, these are the same lows. Then shoulder two. So we have a pattern within a pattern. So if I go back and I delete that, we can see we drew our daily zone here at the shoulder one. We have also nice resistance in the head here, which is a nice supply and demand zone. And if I look further, on that horizontal line on that shoulder one, you can see this is an IC resistance. Here, clear support wicks, very nice. Every time we tap it, impulse, impulse, impulse. So we came aggressively back till the upside. So we closed very nicely. So, and then you can see also here, bulls, bears, then here back bears, bears. So it's a clear supply and demand on the daily. So I was really interested in this trade. So if I go over the weekly, because the only thing that held me a little bit back was the weekly. So the weekly was for me a 104. Why is that? Because the trend for me is bearish. You had here this high, low, then here back this higher high, and then you made here the new low. This is the new low close. So for me, this is one leg. So we had here the high, the low, then here the week high and then a new lower low. So for me, the market is still bearish because I see this as your lower high wick and then here your lower low wick. So actually, if you take a horizontal line here, you can see it doesn't close above that. So for me, we had the bearish W against us, so the trend is against us. What was for us? It was the candle close. So like this, the trend was against us. The candle close here. This one was for us, this blue one. This was for us. So for me, we had 104. And then the fib from this high till this low, it's against us. And then the supply and demand zone here, this resistance here, resistance and here. If I look further back, like this here, you had some really nice supply and demand zone, support, support, resistance, resistance, support. So this is a clear supply demand zone for me here. Again, also support. So we can see that this is a supply and demand zone that can hold our price down. So we have 104. So 104 criteria is normally in our case not a trade we would take, but if I look closer, we can see we had here an impulse, possible correction we had, and we had a new action of that smaller low wick here. We had a new action. We went with that wick a little bit lower and we closed back above it. So for me, it was a clear, nice trade to take, even with the 104. We had that pattern within a pattern. We had that impulse correction. Then here the new action. So these were all advantages. Then on the 4 hour, you had some more advantages. So what can we see on the 4 hour? We can see impulse, one candle, impulse, massive correction. If you look just at impulses and corrections, because I will go over the trade also AUD CAT, I also missed because there was also a huge lesson about impulses and corrections. So we had the impulse, small correction. I see impulse correction. You had here your bullish M on the 4 hour. You can see we tapped it really nicely. This IC, and you can see bulls are starting to kick in from. You can see here also support. And then we grabbed some lower liquidity. So this was the daily liquidity that was taken here from this um, week low. New liquidity was taken, and also from this higher low from the 4 hour week, the new liquidity was taken. So we had two new actions that were taken on the daily on the 4 hour, and we had that impulse correction. Trend was still bullish. You could see the bulls were kicking in from that IC every time here. And then we had that impulse from the daily zone. We can look for a pattern then. And then we received that dual bottom, shoulder one. So the head, resistance in the head, small resistance, and then shoulder two here, and we went to the upside. So it was a clear pattern. And now we can see we broke out of that descending trend line. So there is a 90% chance that we can touch the beginning of correction here. So this beginning of correction. So I just will take everything out on the daily highs. So these are the daily highs, 2.5%. So this is what I normally take out of the market, 2.5%, like this here, 2.5. So it was a nice trade. So then I will go over my missed trades because I had three missed trades. So the first one, AOD Cat, 18 December. It was an inversion and shoulders plus bullish M on the daily with a 4-hour pattern within a pattern. So what uh, I had on this trade, because I had a big conversation about this trade. So I will open the daily, 4-hour, and weekly. So what I had here, I had a big conversation on this trade because I knew one time on a call of Armani when we form a triple top with a new action. So if I go on the daily, you can see, I will explain it. So if I take my true tools, so what can we see on the daily? We had here that bigger bullish M that needed to complete the daily minus 27. So we had here our daily supply and demand zone that we came back to, that previous higher low, which was respected really well. So then we made a new pattern. And what is that? We had that shoulder one here, this head, shoulder two, within that the bullish M. So we had actually three patterns, the bigger bullish M, this one here, then the shoulder one, head, shoulder two, and then the smaller bullish M here. So it were three patterns, which is really powerful. So actually it were more advantageous than, yeah, things against us, because what I saw was the conversation I had was that we had here a triple top. So we have here first top, second top, triple top. So it was holding it down. So that was questioning me. Okay, what did we hear? We made a new action of that previous high, and here also so made here a new action, here a new action. So we make two new actions of these previous daily highs. So and what then? Okay, what Armani once said on a weekly. If I go to the weekly, it's here normally. I guess it's the, yes, this one. So what can we see? If we have a triple top on the daily with a new action and then a weekly selling zone, then there is a high chance it doesn't play out. But what I didn't look at was the impulses and corrections, which is the beginning of everything, impulses and corrections. So what can you see? We had here an impulse and we received a correction. It was not a big impulse to the downside. Okay, this candle was massively closing to the downside, but that second candle wasn't that impulsive. It closed really bullish actually on that shoulder one region. So, and if you look on the 4-hour, I will open the 4-hour, you can see clearly what the impulses are and the corrections. As you can see, impulse, this is a correction, impulse, this is a correction. So yeah, you can see how many candles it uh, was to impulse from this low to this high. This was 1, 2, 3, 4, 5 candles. This was 1, 2, 3, 4, 5, 6, 7, 8, 9, and it just stopped here. So this is a clear indication for us that the price wants to go back to the upside with its ascending trend line, the break of this descending trend line, or tapping the beginning of correction. If you look more closer on the daily, you can see you had here your bigger correction. We broke out of it, and then yeah, we tapped the beginning of correction here, of course, but we had still that correction here, that small 4-hour correction. Yeah, that's the reason I needed to take it. And that was also the thing I missed. Armani said, okay, if we go impulsively to the upside, then this trade is not a good trade anymore to take. So yeah, this was a huge lesson about impulses and corrections. So this was a trade I missed potentially. It was 0.95% you could take out if you take one third out. And it's still running, so potentially going to the daily TP. If I take my new TP strategy, 2.5%. Uh, so yeah, um, this was actually this was actually 3 out of 4. So yeah, this was the thing. So this was a 3 out of 4 on 11 o'clock. You could take it. Then NZD cat. So what I had here was a 2 out of 4 on the weekly, and the thing is, when I trade the 2 out of 4 on the weekly, I normally look for a new action or a pattern on a daily low, fake out, or new action on daily lows or new actions on the previous daily higher low, higher highs. So uh, to increase my chances. So now I consider actually to just also take patterns, just patterns, not diesel on 2 out of 4 weekly criteria, because I think if you have a pattern, it's more confirming to us than a diesel on a 2 out of 4 because the chances are less than it play out. So I will open the chart. So the weekly, the daily, and the 4 hour. So this was a 2 out of 4 trade on 18th of December and the decat pattern within a pattern. So on the daily chart, what can we see? We have here that first leg, second leg, third leg, then that big fourth leg correction, impulse correction. You can see the difference between impulses and corrections. It only depended 1, 2, 3, 4, 5 days. And from this high, you can see it depended 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 candles. So here it was 1, 2, 3, 4, 5, and here 10 to tap the daily zone of interest. So this is a clear sign that the market wants to go back to the upside and is in his correction. So the trend is bullish. So yeah, we have that bigger bullish M. For me, it's a big bullish M. So we want to see a 4 hour pattern. So I will go first over the weekly chart. So the weekly chart, what can we see? We have a 2 out of 4. So what can we see for us? The trend is bullish. We had here this low, high, lower low. We broke out of it. We have a new high, low, then here this higher high. So if you took actually your fib from this low till this high, you had here a -68, a fib completion somewhere in this region. So the fib is against us. The trend is with us. Candle close is against us because this was closing really bearish, this one. It all started from the high and it went all the way closing almost to this lows of that wicks. So this candle close is bearish for me. The fib was against us because we had a fib completion around here, and the supply and demand zone was here, that resistance support here, very nice support with a nice resistance wick aligning with that false break here. So and then here that support here that was holding a little bit the price up for potential upside momentum. So we have a 2 out of 4. So that's what I was explaining is if I have a 2 out of 4, I want to see um, a daily new action on the lows or a 4 hour fake out diesel or a 4 hour pattern at a daily low. So we didn't receive that, or here from that low here, a new action that we had that week here and then going and make that 4 hour bullish M. That was for me the thing I wanted to see, but now I think I will change the psychology behind it. If you have a 2 out of 4 and we get a pattern, because I wanted to see a daily a 4 hour pattern after the daily big bullish M, then I can take these patterns because it also stands in the plan. But just because I had a 2 out of 4 on the weekly, I um I want to see some more increasing probability of the trade going to the daily lows and making there some new action fake out or pattern. So that so then on the 4 hour, What can you see on the 4 hour when we tapped at beginning of correction? So here we tapped at daily zone of interest. We went till a daily highs beginning of correction. So now we needed a pattern reset. We went till the daily lows again, and then we had a pattern reset, and we went and saw a shoulder one head here. That first leg, second leg, third leg, fourth leg bullish, and within that inverted and shoulders, shoulder two was just didn't tap because this difference of IC, because this IC is a little bit closing above that shoulder one, it's really small. You can, yeah, you don't know where the market will take the liquidity on that shoulder one or that IC. The IC, we know it's a really powerful thing that the price wants to reject from. So yeah, the the logical thing to do is to just put your limit on that IC because the difference from shoulder one and that IC is too small. So yeah, you can just take your limit and then it went to the upside. So this trade I missed because I had here that thing to tap the new action, daily lows, then pattern because I had a 2 out of 4. So that I think I will change. So then the next one, so this trade could be a 1.2% with still running trade. That's why I put it here as R, still running, 2 out of 4 criteria. And if I took it with my new TP strategy, it was a 2.5% if I close it at 2.5%. So then the last one, Euro GBP. Um, what I said here, I missed this trade. It was a potential 3.15%. It was on the 19th December. Daily bullish M under a previous lower high, and here the pattern within a pattern. So yeah, actually I need to change here. This was a bigger bullish M. Actually, I just copied. Just saw it bullish M. This was a big one. Uh, big bullish M. Just like this. Then I know it was a big bullish M with a huge correction. Then Euro GBP, I was explaining this was 3.15% potential. I could take this 3 out of 4 criteria. And you can see also on the new TP strategy, sorry, 2.5% fully closed. So I will open the chart weekly, daily, and then 4 hour. So what can you see on the daily chart? So we are now at the daily chart. You can see the trend is bearish for us. We had here that low, we had a new high, and we made a new close below that. So we are bearish. So we had still some potential to go to the upside because this was a major move. I mean, we're at this weekly buying zone, monthly lows. So this is a potential trade that could play out to the upside because we had that flat wall. There was nothing in between, no candles. We could just go up because there was anything sitting in the way. So there was nothing sitting in the way for us. So we could go to the upside. So what could we see? We had that first leg, second leg, third leg, fourth leg, bullish M under the previous lower high, low. So this was just a bullish M under a previous lower high low. So it was against the trend. Bullish M against the trend. So I just took my fib from this low till this high here. And you can see our daily TP wasn't hit yet. So this fib from this low to this high was still valid. So, and you saw here then that new bullish M forming, but we didn't yet tap this new daily TP. So actually, our daily TP is still valid. And if we look on the 4 hour, in a minute or two, I will explain it. Then we could trade that pattern because this old daily bullish M was still in play and the daily TP didn't tap. So for me, we had no daily new pattern. Okay, you can see this is a new daily bullish M, but we didn't need necessary to tap these daily lows because the daily pattern was already active here. these zones here. So it was already active. Actually, it was on this daily zone because I drew it here. So normally we would set if we had here a new pattern, this bullish M, then the daily zone of interest was here. But if you look at this bullish M here, the daily zone was here. So we tapped it here and then we went to the upside. So I will go over the weekly. I will go over the weekly like this. So the weekly was a 3 out of 4 for us because for me the trend was bullish. Because we had here our lower high, lower low. And if we drew our horizontal line and we go and we go and we go and go, you can see we broke it here. So for me, it was bullish. This was a one whole leg. You can see it also as a correction. You can see that correction impulse, okay. But then we want to form also a shoulder one, head shoulder two, because this was that flat wall. This was a daily bearish trend, so we want to tap that shoulder one, head shoulder two, because the market likes to do that. So for me, the trend was there bullish. So this is forest candle close here was not that how I need to say that so short that it was bullish. It was closing 50-50 to the upside and the downside. So it was an indecision candle for me, so I didn't count it with us. So then the FIB from this low till this high, it was within the FIB levels. Then the supply and demand zone here, weekly buyers, false break, buyers, false break, buyers, buyers. So it's a clear buying zone, as you can see, and here also some resistance in it, as you can see. So the FIB passer and the supply and demand zone, we had a 3 out of 4. So then we will go to the 4-hour chart because the daily was also clear for us. As I explained, this daily TP needed to be tapped, so it wasn't tapped. So actually, you could just look at the 4-hour chart and not do that daily zone of interest because I was also looking at the daily zone of interest lows, what I was saying. This was then a new bullish M, and you want to see here a 4-hour pattern. But actually, the daily TP wasn't tapped yet, so you could still look for a pattern on the 4-hour. And what you saw was this was a low, this was a high. We made a new low, we made a new high. So what could we form? We could form an possible shoulder one here, head shoulder two. But what is the logical one? What is the better one if you look? Because if you look more closer, you had also had an inner structure in it. You had here your first leg, second leg, third leg, fourth leg, and then you had your impulse, then your correction, and then you could take your shoulder one, head, shoulder two here. This was the better option. So you can also see within that shoulder one, head shoulder two, yet also here your bullish M. So here you had a pattern within a pattern, which was aligning here that resistance on that shoulder one, supply and demand zone, like that. And we went to the upside. So this was a really, yeah, this was a trade you needed to pay a lot of attention and focus to see this as just still valid, not a new bullish M, but you could just still count the legs and what was the pattern. So then we tap the daily TP. So this was a missed trade. So potential 7.5% if you take my new TP strategy of 2.5% closing, or if you just doing 1/3 out of the 4-hour TP and the daily fully close, then you could have a 5.25% at the end of the week. So actually, we can trade within the slow weeks. There are always some potential setups to take. So yeah, this is just feedback for us, for me. So I hope you liked the weekly review and yeah, see you next week. Bye.